All right, today we're going to follow the money. We are going to trace the entire life story of a sophisticated financial crime. It all starts with a single fake entry in a company's books, then weaves through the wild world of money laundering, and it all ends up in a final showdown in the courtroom. Let's dive in.
This is the big question, right? It's the puzzle behind some of the biggest financial scandals you've ever heard of. How do you take millions in dirty cash and wash it until it's sparkling clean, looking just like a regular paycheck? Well, this whole journey from dirty to clean, it starts in a place that's surprisingly simple.
It all begins right here, with a little something we all call cooking the books. See, before a single stolen dollar can be laundered, the crime itself has to be hidden. And that hiding place? It's usually tucked away inside the very records that are supposed to keep a company honest. This is the first crucial act of deception. Now, the official legal term for this is fraudulent false accounting. But let's be real. In plain English, it just means deliberately lying on a financial document. This crime almost never works alone. It's usually the sidekick to another crime, like theft or forgery, because its whole purpose is to cover up the tracks of that first illegal move. What's really fascinating is how the law breaks this down into three very specific actions. If we look at a legal system like Nigeria's criminal code, for example, it's super clear. You can either destroy or falsify the records, or you can knowingly make a false entry, or you can just omit a crucial detail. That's it. Any one of those, if you do it to defraud someone, is a serious crime.
So, the books are cooked, the theft is hidden. But what happens next? Now the criminal is sitting on a big pile of cash they can't really use without raising all sorts of red flags. This next step is all about making that dirty money usable. Yeah, it's time to do the laundry.
This really gets to the heart of it. Money laundering is literally a cleaning process. It's the art of taking dirty money from crime and running it through a bunch of transactions. Often using legitimate businesses that handle a lot of cash, like a restaurant or a car wash, until it pops out the other side looking like clean, hard-earned profit. But of course, for a crime this clever, there's a whole legal system designed to fight back. And to see how it works, we can look at a really modern framework like Nigeria's Money Laundering Act of 2022. It basically lays out a series of traps to catch this dirty money while it's on the move.
And the main strategy here is surprisingly direct. Just control the flow of physical cash. Huge cash deals are a classic sign of money laundering, so the law puts really strict limits on them. This forces the money out of the shadows and into the official banking system where, every single move can be tracked.
Okay, so for an individual, the magic number to remember is this: 5 million naira. Any cash payment above that, doesn't matter if you're making it or taking it, it has to go through a bank. No ifs, ands, or buts.
Now for a corporation, that number doubles to 10 million naira. The law gets that businesses handle bigger sums, but the idea is exactly the same. Force those large transactions into the daylight where everyone can see them.
And this isn't just a local thing. The net is cast globally. If you're moving more than 10,000 US dollars or its equivalent across the border, whether you're wiring it or literally carrying it, you have to declare it to the authorities. This plugs a huge loophole for moving dirty money around the world. But, criminals are clever. They know about these cash limits. So what do? They try to hide their tracks in a bunch of smaller, more complicated transactions. And that's exactly why the law basically deputizes banks and other financial institutions to be its eyes and ears on the ground, training them to spot some very specific red flags.
So this brings us to the key question for every bank teller and compliance officer out there. What exactly are they looking for? What turns a totally normal transaction into a suspicious one that they absolutely have to report? Well, the law is very specific about this.
This table lays it all out. A transaction gets flagged if its frequency just doesn't make sense, or if its complexity is unusual and has no good reason. Another huge red flag is its objective. Does it even have a logical economic purpose? They also look for inconsistency, meaning the transaction is totally out of character for that customer. And finally, just plain old suspicion. If the bank thinks the money comes from criminal activity, they are legally required to report it to authorities, like the Nigerian Financial Intelligence Unit, within 24 hours.
So let's fast forward. The books are cooked, the money's been moved, and the red flags have been raised. An arrest is made. Now we enter the final arena, the courtroom. But how on earth do you explain this tangled web of financial lies to a judge and jury? Simple. You call in an expert.
An expert witness is basically a translator for the court. In a financial crime case, this is almost always going to be an accountant. It's their job to take these mountains of dense, confusing numbers and make it all make sense, to connect the dots for everybody in the room. The accountant's job here really breaks down into 3 key parts. First, they authenticate the evidence, proving that these are real documents from the day-to-day business. Second, they verify that they're either the originals or certified copies. And third, and this is the most important part, they provide the analysis. This is the so what. They explain what the numbers actually mean and how they prove the crime.
And there you have it, the whole story, from beginning to end. It all starts with one dishonest keystroke in a ledger. It flows through a maze-like laundering system built to hide where it came from. And it ends under the bright lights of a courtroom, where an expert finally lays out the entire scheme for everyone to see.
But let's be clear, this battle is far from over. With crypto, anonymous shell companies, and instant global transfers, the ways to cook the books and clean the cash are evolving faster than ever. It leaves us with a really critical question for the future. As the game changes, how will the rules, and the people who enforce them, change with it?